Welcome to the channel again, peeps. Today we're going to be talking about how you're able to catch consistent setups in a market. This is the strategy that helps me continually make money on my funded account, add and build my personal account, and I'm going to show you right now. Let's break down two setups we've had this month. Two very good setups. Textbook for my strategy. I'm going to show you exactly how I got in the market and I was able to capitalize. So I always want to start on a weekly time frame, but that's obviously where I start my analysis for the beginning of the week. This is the trade I had on the 16th of July. So I want to start at the beginning of the week so you can see exactly how the market conditions was looking at. On the weekly, you can see got our weekly levels of support on. Support, term resistance, resistance, whatever. We've got our levels on, we don't really need that much. We're not trading the weekly, we're just using the weekly to show us exactly where price is moving to. You know what I'm saying? So just because the weekly is bullish, don't mean you can't catch a short on the daily or 4-hour time frame. Do you know what I'm saying? We're just using the weekly so we have a zoomed out perspective how the market's looking. So this is how the weekly was looking this particular week. As you can see, after hitting this level of support, price has been on a bullish impulse and then pushing up. We also broke some structure, so structure is bullish as well. We had a strong bullish close above resistance. So if we look into this candle, as you can see, we've had this is the resistance level. We've had a retest of it this week, and then we've had a nice strong close. So just showing us a lot of bullish signs. Obviously, price can continue, or we can get the pullback. But we have to go to the daily. See, you know, scale down over to the daily, and that shows what the daily is looking at. Okay, so the daily is confirming again what the weekly was saying. Price is looking bullish. As you can see, price has been in this consolidation for quite some time on the daily. Price then finally gets the breakout of consolidation and breaks out this resistance that was formed. So all I'm waiting for is what? If you watch my videos, you should know. You should know how I trade. It's a break and retest. You know son. Literally how I trade. Simple shit all the time. Simple and repeatable. You know what I'm saying? So, got the breakout. This resistance was formed. All I'm waiting for now is a retest of the level. This is our area of interest, point of interest, level of interest, whatever you want to call it. This is the level we're waiting for price to return to. From here, we're looking for some breaks of structures on the lower time frames, and then we'll obviously be looking to long it because the trend is bullish. So let's forward. Boom. Price returns to our level of interest, and from here is where we're looking for longs. So price is back at this level of support, our level of interest. This is where it is, just to highlight it there. Boom. That's exactly where we're looking for our long. Yeah. We wait for that correction. The price corrected right back to the level I was looking at. And now I'm looking on the time frame, but I look to get my entries, which is the 1 hour. Go over to the 1 hour now, and all I'm waiting for is a tap of this level because I need to see price return to this level. We've got the tap of the level there. Now price has returned to the level, my level of interest. Now I want to see something to show me that price is looking to go in my intended direction, which I'm thinking is bullish. Yeah, price needs to show me. I need to see some signs on the chart, and those signs are breaks of structure. So right now, on the correction back to this level, price is obviously bearish and bearish structure. So we want to see a flip of this bearish structure into bullish structure, so we can confirm, all right, price is looking to continue long now. We then get that. Everyone trades their break of structure different. This is how I trade, man. So we had the bearish structure correction back into this level of interest. Once we tap this level, we've essentially made a higher low here. This is this low here, made a higher low, but that don't count for nothing until we break structure. So with this candle close above this region and level here, we've now broken structure. Now I can look for long. But if you look at this candle, this is at 3 AM. No one ain't awake at this time, you know what I'm saying? Or at least I'm not. If we fast forward a bit, so this is the 6 o'clock candle. So that's where I'll be looking to get in long. When I woke up, I saw that structure had been broken. You see, we broken structure and price was right here. So it was right at resistance, or support rather. So I was like, cool, I'm gonna set my entry there, put my stop at this low. This is my validation level. If price touches this level, I'm happy to come out. And then my TP is set at highs. I'm anticipating price to return back to the high that it's just made. That's essentially how I trade this type of setup. My entry's there, my stop's at the low, and my TP is at this high right here. And as you can see, boom, price played out, 1.7R, just under that. TP was hit. Simple breakout, retest, continuation setup. Now that setup is so nice, I had to do it twice. So I'm gonna show you now another similar setup which I took, which is basically the same thing. And that's what you guys need to drill into your head. You need to have your trading setup as similar as possible. It has to be the same thing you're doing all the time in the market. You can't be doing one thing one week, another thing next week, another thing the week after. That's how you, more time, you're not gonna be profitable if you do that. The most profitable traders you're gonna see are people that do the same thing week in, week out. Same setups, they're taking the same setups. That's literally your bread and butter, this game. Obviously it's not gonna work every week, but you know, over time it's gonna work more time, you know what I'm saying? Without further ado, let's go into that setup I was talking about. Okay, so let me show you the second trade that I pulled, which is literally the same type of setup. So this trade was on US dollar JPY. So we've got our level on there, we've got them on. Now we just take that zoomed in approach. We can really see that price is bullish. Price was essentially in a bearish trend here, and since hitting this level of support, price wasn't continuing making lower lows, lower highs. What happened is we bounced up, come into this region of resistance, put the rejection from that level of resistance, and then failed to make a new low. So that was the first sign that showed me, okay, price is looking to flip. More signs was that price was starting to make higher lows on the weekly. You can see this low here, higher than this low. This low here, higher than this low. So I've seen higher lows being made. This was kind of consolidating upwards. So I kept that at the back of my mind. We plot on this weekly level of resistance now, support. Price had broken above it. So I was simply just waiting. I was like, okay, cool. Price has now made a higher high compared to this high. We've already been making high lows, high lows. We failed to continue this bearish trend which was in and make a lower low. And now price has pushed up, made a new high, showing me bullish signs. So I was just like, okay, yeah, this is looking to move bullish. Price could have continued up, or it could have came back, had a deeper pullback. But all I could see from the weekly perspective, this is looking bullish. When we scale down to the daily, we're able to see more in depth what I was looking at and how I was able to get in some longs. As you can see, price had made a double bottom, broken out of this high, made a higher high, and we know this is a double bottom, so this is a double bottom neckline, and it's also a level of resistance, turn support. So what I was anticipating was for a retest, this level, this is where I was looking for longs. Simple as that. So I'm waiting for that correction, obviously looking at the 4 hour and the 1 hour time frame. As you can see, we correct right back into our level of interest right here. Once we correct back into this level, and then get that 1 hour break of structure, then we can start getting our longs. This is actually a good example because I'm going to show you how, even though your analysis is correct, how you still get losses. Price came into my level of interest, got that break of structure there, tapped our level, broken structure. So this is my first entry on this pair. My TP will be at this level of resistance. Obviously, you know I do it at the next high. As you can see, this high respected this level of resistance. So for me, the resistance more overrules the high. So I'm just going to aim for that next level of resistance. And as you can see, my first entry tapped my stop loss. So I was like, okay, cool. Good trade. Tap my stop loss. We move in it, that's -1R. This is the key thing to mention. Just because your stop loss gets tapped, don't mean, okay, now I was wrong. Let me change my bias. Price is bearish. Do you know what I mean? Sometimes price is going to tap your stops. Can't help it, it's trading and it's the probabilities. So boom, my bias didn't change, I was still bullish. So I was like, okay, cool. Price stopped me out. I was looking to see if I can get another entry. Obviously my rules, I can't re-enter on the same day if I get stopped out. So the next day came and then price broke structure again on the 1 hour. So as you can see, after stopping me out in that first position there, tapped this level support, made a lower low, and then we've broken structure there. So with this breaker structure there, I was like, okay, cool. This could be my second time to re-enter. So I entered there, stopped at the low. I found validation again. And my TP is there at the level of resistance. And as you can see, this trade ended up playing out. It's an example of not changing your bias just because you get stopped out of position. The best thing to do is at the end of your session, once you got stopped out, for me, when I'm re-evaluating the charts to see if there's any setups for the next day, I'll be looking, I'll be like, okay, cool. It still looks bullish if we can get a break of structure. Our bias is not changing. That's the example as why you should stick to your bias, because the trade can still end up playing out. And as you can see, it played out on the next day when I was able to get in. Same type of setup as I showed you the first trade. Simple breakout, retest, continuation trade. This is simple, repeatable, it always happens in the market, and it's very easy to spot. That's literally it from me. Hope you lot enjoyed this video. Be a lot more videos, so make sure you like, subscribe, leave some comments below. And yeah, man, I'm out.
In London, I'm sipping on dirty. I'm mixing the quite with the Macintosh. Favorite bitch on IG, she really be ducking her landlord. Cybercheck, I know keys, crank it up using the credit card. She think I got sixes on my mind, my head from Mattyport. I got different vibes in different states, come in categories. Said she know how to keep a secret, I'ma have her bragging on it. Said she never been a dusty type, I got her begging for it. Don't know if I'm gonna see her again, I might just schedule for it. I can give you money, but not my time, cause I can't make no more.